Hello and welcome to another update video about gold. We start on the 4-hour time frame. Just want to explain again briefly the structure from the November 22 lows before we dive into the micro patterns. Here we can see that this was a larger degree fourth wave pullback which bottomed in November 22. Then an ABC structure to the upside followed. You can interpret this as a 5-wave move, but also as a 3-wave move, which makes more sense given the structure of the most recent price action here, in which we have an ABC structure to the upside. So therefore I'm considering that as wave 1, wave 2, currently the 3rd wave in that 5th wave. So we are dealing with an ending diagonal. That is why the subwave structures are corrective. We are currently, as per this interpretation, in the C wave to the upside of this larger degree 3rd wave. And that C wave is, as I said, a 5-wave pattern. That's the current assumption. So if we zoom into the detail, then we can see that the C wave likely produced already a wave 1, a wave 2, and a wave 3. So we have 3 waves up. That leaves some room for interpretation because in one of the scenarios, we're now in a wave 4 pullback, which ideally does not break below 2,295. Maybe we could still allow that, but it will already start, probabilities will start to shift then already. It might break below 2,260, but 2,295, that's the 50% retracement level, and that level ideally does hold in wave C or 4. So we're going to talk about that in a minute. That's just fib levels at the moment. So there is a support region, an upper support region. As long as it's holding, I can call that a wave 4 pullback. The lower it goes, the more the probabilities, of course, of breaking support. But for now, we haven't broken it. We haven't even broken below the 50% Fibonacci retracement there at 2,295. One more high should send the price higher in wave 5 of C of 3. And we can calculate a target for that one as well, just purely based on the length of waves 1 and 2, and then the third wave, the third wave would normally reach like the 1.38 extension. The 5th wave, which this one would be, should reach sort of 2,500, the 1.618, but 5th waves tend to extend in commodities, so we might, but this is a Z wave, 5th wave, so it's a bit, it could reach 2,512, 2,550, maybe even 2,600. Just that you have a bit of an idea where things might be going. The thing is, I can't confirm that yet because there is no confirmed low in place for that 4th wave. That gives you some ideas. Now, looking at the alternative scenario, which would have to be activated if we get a deeper pullback, that could, by the way, be the last opportunity to really accumulate gold before it really starts to rally in that larger C wave then of wave 3. Well, in this scenario, the 3rd wave also unfolds as an ABC structure. It's just that instead of ABC, all of wave 3, the yellow count completes here only the A wave. It's just a slightly different structure. To keep it very simple, what you need to understand, if the upper support area breaks, it's likely not a 4-5 pattern we're looking for, but an AB. That B wave allows for a deeper pullback, would still be bullish, eventually actually even more bullish as per the interpretation, because then due to the length of that yellow A wave, the C wave should stretch much higher, possibly could even eventually stretch to $2,800, $2,900, yeah, depending on where the B wave bottoms. For now, in the very short term, it's only important, I think, to recognize that there is currently no indication that we've put a low in place here. This here is a 3-wave rally, and if it's a wave 4 of C, of 4 or A, that 4th wave likely or ideally topped. We can also add a resistance area, micro resistance. 4th waves tend to react to the area between the 38.2 and the 50% fib level. It did that, and one more low could finish off this direct correction. And then we need to see if the next move up is impulsive and breaks above the B wave high. That would indicate the correction is completed. If it's a 3-wave corrective rally that stays below the high, then it might just be a B wave and we come down in wave C. So it will depend on the structure of the next rally. But I think for now, One more low seems likely. One more low seems likely. The wave count is unchanged from the last video, but a break above 2,362 would be too high for a fourth wave. Then, depending on the structure, we would need to explore if this is a B wave already or if we're already in the fifth wave. Either way, this is an area where we would like to see a bounce from, but probably not after one more low, which could reach 2,295. Alternatively, a break above 2,362 should tell us that a more substantial bounce is coming, but we then still need to deal with the question, is it a B wave or already wave 5? Looking at silver, for example, silver would rather suggest the yellow pathway here. So that's also what I definitely consider for gold. That would be eventually more bullish, all right? Therefore, I can't really say, one is more likely than the other. It's more like, okay, one more low seems likely. Let's see how the rally looks like, okay? And if it's just a corrective rally, then there's another chance for a lower B wave before really then escalating higher. It's going to be interesting. That's sort of at the moment my perspective on gold. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you're interested in daily updates about the S&P 500 as well as regular updates about stocks, feel free to check out these stocks and S&P 500 service. You'll find the link in the description. Thanks a lot for watching. Bye-bye.